Bitcoin and Ethereum could be literally on the brink of something very, very bad right now. It's potentially already initiated, so I want to talk to you about what exactly has been going on since the prices have slipped lower over the last 24 hours. We've seen a fair bit of a decline here. I was mentioning in my last video that, we're kind of re-entering the bottom of the range, but ladies and gents, we have now fallen out of that range right here. It was with this yellow box right here that I had drawn for you in the previous video. It was very clear that we had this potential area to enjoy a bit of support, but we are now below it, and we're doing actually the key thing that I was warning could be a problem for the charts right here. So there's a lot to go into. There's a lot of nuance to explore right here, and I want to be able to present that to you in as simple of a way as possible. So if you appreciate this kind of content, if you find it useful, do me a favor and throw up a like on this video. It really helps out the channel. Subscribe and tick the bell, of course, if you haven't done those things already as well, because this content is, of course, very, very time sensitive. But here's the thing, this area has been acting as support for quite a bit, stretching between essentially $28,000 to $29,000. And now that we're below it, you see, the last time we came below it, we were very quick. We came down and we snapped right back up. And this is on the 4-hour time frame, but if we zoom in on the 1-hour time frame, it's still the same picture. I mean, the price wasn't hanging around over here. It very quickly recovered back up, which is good. That's a sign of a healthy correction. But this time, it's markedly slower. It's very, very clear that it's slower right here, and that's a problem. Obviously that means that we have less strength now over here than we did right here, and obviously this is coming after consolidation. Anything that happens after a period of consolidation is going to be quite significant. So obviously this could just be a fake out, and we could end up re-entering the range. Don't be surprised if that happens, ladies and gents. That's very much on the cards. But, perhaps more likely it is following that typical pattern where, we are still on a large scale. I want to remind you guys, it's the same thing that I've been saying for, a long time now. Hopefully the message, pardon me, has been coming across quite clearly that we are still in a downtrend right here. And, we've been setting lower highs and lower lows for quite some time, and we can't confidently say that this is broken until we start setting higher highs, right? And so to give you an example of what that means, just to put this in perspective of exactly what these the implications of these crashes are right here. If we set this high right here at 32.5, that is our high that we need to beat. Anything below 32.5 is still very much within a bearish market structure, because we're not breaking that high. If we trace this trend back, one of the key things that tell us about a trend, and this is really important because we want to know, when is this thing going to break out? When are we actually going to get that? When are we going to get rewarded for getting fucking whipped around for like 2 years now? The answer to that is when we start, when we start setting higher highs, when we stop setting lower highs. Looking at this trend right here, obviously it's high after high that just kept decreasing. We did actually temporarily break that structure right here, but this is where we just say, well, this is the macro high. And if we're only measuring macro highs, then really, in my opinion, you've only got the first one, perhaps this, if you're being generous, maybe this high right here, and potentially this one now, as far as macro highs go for the trend. And that's important because, again, we're not doing that right now. And actually, what we tend to do in these bear markets is, we set a low, we, fairly quickly recover up above it, and then we fight the trend a little bit, we consolidate, and then the next time we revisit that very same low right here, these two circles being at the same level, the next time we revisit that low, we crash below it, and now we're potentially doing the same thing right here, getting ready to crash below it. And of course, going back to the title of this video and what I said at the beginning in terms of, potentially a very big problem, potentially Bitcoin and Ethereum's death, obviously, that wouldn't be a permanent death. It would only be a short-term one, where people become very scared and just start, potentially panic selling, offloading their crypto very, very, very quickly. Perhaps the main reason we can expect that, it's been the recurring theme of this YouTube channel for quite a while now is because there's no trading history that's ever taken place between essentially, you know, let me just color code this all a little bit better. In fact, let me use a different chart because this is very confusing. You know, we haven't had any trading happen ever really within this box, and that's quite a big range. That's from 20,000 to, you know, $29,000 basically, and we actually used to be able to draw the box all the way up to, you know, around over here. You know, if we don't count the price action right here, I mean, we didn't really, you know, with small exceptions like these wicks, the range is a lot bigger. It's, you know, it's more like, you know, essentially 19.5 up to $31,000. You know, so that range, which is completely untouched, is still there, you know. And the reason I'm saying this is obviously we went up too quickly. You know, if you're subscribed to this YouTube channel, if you've been regularly catching this content, you're going to know all about that and what the implications are of, you know, rising very, very quickly, you know, which is essentially that you don't manage to establish any resistance on the way up, and so you don't have any support on the way down. There's just nothing for the market to cling on to, and so, you know, we tend to see pretty quick drops. The bad news, and we've been tracing this with Ethereum, is, you know, Ethereum had its support right here. This was Ethereum's, you know, final gate, as far as I'm concerned, and take a look at how that went. You know, we're now below it, and if we're looking for support on this chart, you know, the next big area of support that I'm seeing is going to be that $400 level, which was where, if you were subscribed to the channel back then, you're going to remember throughout this period, you know, it was around here, just in this whole gap, to be honest, it was for quite a while, that I was very bullish on Ethereum, talking about how, you know, this is a good time to be buying, and we were actually trading it inside of VIP as well. You guys already know the deal with that. I don't have the file, unfortunately, but it's the first link in the description down below where you can watch me trading, you know, see absolutely everything that goes on behind the scenes, on the trades that I'm making, all the information on my entry levels, my exits, my leverage, if I'm using leverage, which I usually do, and all that good stuff. It's all right there with the first link in the description down below. But, you know, this chart right here painting quite a, you know, potentially concerning picture, because, again, you know, if you keep in mind what I said over the last few minutes about how, you know, if you don't actually establish resistance on the way up, you're probably not going to have support on the way down. You know, that's the same case right here. You know, Ethereum had two big run-ups above $400, from $400 in this case up to its, you know, previous all-time high at $1,400, and then obviously the second time around it surpassed that all-time high, went up to, you know, 2,000, and then, you know, basically just kept going until it reached 4,000. In both of these instances, we didn't really have much resistance, you know, and there are a few, you know, things right here that slowed down the market in terms of key price levels, but it's not, you know, it's still a pretty, you know, it's pretty much a straight line, let's be honest. And on the way down, it was largely the same thing too. Straight line down, straight line up for a bounce, and straight line down. You know, there's just not much market structure. There's not much going on. You're just, you know, the direction is very obvious. The direction is very clear. And that's the only thing that the market is doing, is it is following that direction. And when that happens, again, that tends to mean that moves can happen very quickly. You know, that's basically like, you know, we've had the, if there is such a thing, we've had the pre-tremor shocks of an earthquake right now. I mean, I guess you could even say the earthquake is initiated, because, again, like I said a few minutes ago, we've now lost my level of support that I had drawn here. Now, obviously, you can keep drawing support by, you know, just dropping lines randomly, like, you know, like this kind of thing. But look, for the most part, guys, this was pretty strong support, in my opinion. It was confirmed with all of these back tests. I mean, yes, at first we did have resistance, and that's great too. You know, that tells us a lot about how important a support or resistance level might be. But, you know, afterwards, we kept coming down and finding support here. You know, as recently as I don't know, like 2 weeks ago, you know, like quite recently. And so to now have lost this level that is a death blow. You know, I mean, that is bad. There's just no other way around it. And the problem here is, you know, I'd love to say that this might be a fake out and the market might recover up. And obviously that's still on the cards. You know, anything is possible. And I wouldn't say that the possibility of this is very low. You know, I think there's some probability that, you know, Ethereum could, I'm not ruling it out. And I think, you know, there are decent odds of it happening, but I'm definitely more leaning towards, look, like as a technical analyst, when you breach a key level like this and you consolidate at it before you breach it, and now you're on the second daily candle trading below this area of support, and this daily candle only has 5 hours left, so you pretty much know that this day is going to close red as well. You know, well, that's a lot of signs telling us that this is not a fake out. You know, and that's besides just looking at the actual fucking drop, which is that it's a 15% move down. And, you know, fake outs are generally not going to be more than 1 or 3% down. So I wish I could be more optimistic about this, but I can't. As a technical analyst, this is not good. And, you know, the reason I'm not totally worried about this is that, similar to Bitcoin, I think there's a good chance we get that reaction rally. That reaction rally might not come quickly. You know, usually when we get them, we're going to get them quickly. We're going to get them within, you know, days or a very small amount of weeks. I mean, it usually doesn't take long, but it could. You know, we could end up seeing this thing drop down to $1,000 and then have a macro swing up to, you know, $1,600, $1,700 before potentially continuing down, if that's the direction that the market is going to take. Perhaps by this point we regain enough strength to adequately challenge this level, maybe try it a few more times, print an ascending triangle, and then break out. That's how markets move. And the goal of this YouTube channel, definitely the goal of VIP, everything that's going on behind the scenes, and the goal of the 𝗧𝗢𝗥𝗙𝗦 Academy courses that you're going to be getting for free when you join VIP, you know, they are all oriented towards making you think like this, so that you think in terms of real market movements, not the things that get you excited, but the things that are realistic, and you do it with a good sense of probability. That's all trading is. It's you know, I wish I could tell you it was something different. I wish I could tell you it was something more glamorous, but it's just probability work, and it's risk management. So and anyone that knows what trading is will confirm that. You know, anyone that doesn't tell you this hasn't traded. You know, you can trade for 6 months and think you know what you're talking about, but over time it always just comes down to probabilities and risk management. And, you know, the risk management is the easy part. This is just self-control. This is where most people fuck up. But, you know, if you nail this down, and we've taught so many people how to do that, if you nail this down, you know, then you just have the probability work to do, and that's the fun stuff. That's the actual trading. That's what only is shown to VIP members with that first link in the description down below. And when you do follow it, you'll get all the other steps on how to join 𝗧𝗢𝗥𝗙𝗦's VIP as well. There's a little price discount running for you right now if you do want to take advantage of it. Also, I just want to give another quick shout out to Bybit. You guys already know the deal. This is the only exchange that I'm using. I've been executing all of my trades on it, of course, and you can check them out with the link in the description down below. When you sign up using my link down there, you're going to be getting an extra deposit credited into your account for free. So you get basically free money in your account when you sign up using my link in the description and make your first deposit. So about 30-second process to register, very, very quick, another few minutes to make your first deposit, and you're going to get free money for it, which you can trade with. Well worth checking out in order to trade on, you know, as I say, what is my favorite exchange. I've been working with them for years, so I'm certainly biased, but you know, I loved this exchange before I was working with them too. They're just ahead of the game. Back to the markets though. From these charts, like I said, you know, potentially looking at quite big rips to the downside. You know, I mean, if we lose this area, then that's more than a $1,000 drop. until, you know, the next major area of support that I'm seeing, which is going to be the $400 range. And of course, it's the same picture for Bitcoin. You know, I mean, it's not different. If we zoom out and you know, again, we take a look at this and just remind ourselves what we're actually working with here, you know, this is a completely empty range. We've never traded in it. It's actually much worse for Bitcoin than it is for Ethereum in terms of, you know, how obvious it is that we would probably drop very hard. The difference is Bitcoin in this case would probably, you know, in this case, in this example, drop by, you know, about 30%. Ethereum would drop by, you know, maybe a further 80%, you know, something much bigger. So, you know, I'd say it's better to be positioned in Bitcoin at a time like this. You know, if you were in VIP, you're going to know that I completely positioned myself out of Ethereum before all of this mess happened. I actually traded a very impressive move right here from this $2,900 level up to this high. And this was pretty much right here where my cursor is pretty much exactly where I sold all of my Ethereum. I can't say that I saw this coming, but I definitely knew that things were not good for Ethereum. And so that ended up being a very, very good decision. You know, it's moves like that, which it obviously hasn't made me any money. I mean, I did make, you know, up to 200% profit on the run up, but you know, the second move, which was to close everything related to Ethereum, that was that's just a measure which is not sexy, which is not exciting, but it prevents me from losing money. And the thing to keep in mind, ladies and gents, as traders is, you know, time is money. You know, if you lose time, that means if you lose money, that means you're losing time that you could be building up, because no matter what happens as a trader, I hate to be the one to break this to you if this is the first time you're hearing this, but no matter what happens as a trader, you're always just going to be going on a slow, steady grind up. You know, this is your best case scenario, and I mean, it could be a little bit steeper for some people. For some people, it's very fucking steep, but for most people, you're looking at something, you know, quite stable, and that's your best bet. Which means that if you suddenly fuck up and you tank yourself, you're still you know, you're not going to be able to jack up that gradient too much. Some people can. I've been able to pull it off. Many of our VIP members have been able to pull it off, but for the most part, you know, don't expect it. It's dangerous to expect stuff like that, and that's why, you know, these longer term approaches of, you know, I don't want to deal with that you know, sudden drop, which is why I take risk management so seriously, which is why you know, I took it so seriously to, you know, sell that Ethereum up there. That stuff is really important as a trader. It's your only hope, really, because you're going to keep building slowly and setting yourself back massively if you're not able to protect yourself from things like this. So that is my very long and important piece on risk management. I haven't spoken about something like this for quite a while, so let me know in the comments down below the like and subscribe button if you found this useful, and if you want me to talk more about it. While you're down in the comments, I want to apologize for all of the spammers. It's absolutely crazy, and the issue here is we can block keywords, right, for comments, but we can't block them faster than the shitcoins are coming out, or faster than the scams are coming out. And so, you know, like there's a new name that they want you to Google every day. There's a new coin that you're supposed to Google every day. And until we see these, you know, scams, we can't block those words. So that's that's basically how the spam comment issue works on YouTube. And they, for sure, should have done a better job at protecting users from this stuff. But unfortunately, they haven't. And I'm sure they're going to get around to it. But for now, the problem we have to deal with is, unfortunately, yeah, quite ugly looking comment sections. And if anything, please just use this as a reminder that when you're trying to find me anywhere, or any of your other favorite content creators out there who happen to be verified, please only use the links on their website. Actually, this has nothing to do with verification. You only use the links on the official, you know, YouTube channel. So I've got my Twitter, my Instagram, my Telegram, all linked in the description. Everything you need from me, everything I mention is linked in the description. You know, that's how you know you're going to the correct places. And then where your you know, content creators have the verified badges as well on Twitter, Instagram, YouTube, whatever, you know, look for it. If you know that the person you're following is verified, and then someone DMs you who isn't verified, and it should be obvious. It should be obvious. But I have to say it, because guys, people are falling for this stuff, and it's no good. So hopefully this helps somebody. One final time, check out Bybit with the link in the description. See, that link is legit too, because it's in this YouTube description. You can always trust the links in, to an extent, obviously. But for content creators, if you're trying to look for things we're talking about, we're going to put the legit stuff in the description. Scammers are going to put stuff in the comments. Bybit is linked down below. And yeah, like I was saying, you get some free money deposited into your account as well, which is absolutely great. If you want to join 𝗪𝗡𝗡's VIP, then follow the first link in the description, where you'll see additional steps on how to join VIP. Really hope you have enjoyed this one. You know what to do if you have. Hit up the likes, subscribe, tick the bell, and I'm out. Bye-bye.